What's up, y'all? Today we're going to talk about stocks versus metals and if silver is even worth your time. Adding precious metals to your portfolio is a no-brainer in my opinion, and gold will not disappoint. First of all, when it comes to buying any precious metals, there's a few things to keep in mind. First, dealers will have a premium rate on top of their spot price, so make sure you check around and find the best deal. Second, check your state's precious metal tax laws. In New York, the law states that any purchase over $1,000 of bullion is tax-free. Any purchase made under $1,000 will be taxed at your state's regular rate. Alright, let's get started. Recently, there's been some price movements in silver, and it could be a nice addition to your portfolio. As of June 25, silver is trading at roughly $36 per ounce. That's around an 18% gain in the past year. That sounds pretty good, but is it really worth your money? And how does it compare to the other investments? In that same past year, gold has gone up 40%, and the S&P 500 has gone up 10%. Let's back up a little. This year's been a little crazy though. Actually, these past 5 years have been absolutely nuts. So let's stretch it back 10 years and compare for some real long-term results. In July 2015, gold was trading at $1,100 per ounce. VOO traded at $192 per share, and silver traded at $15 per ounce. Today, gold is trading at $3,335 for a 190% gain. Silver is trading at $36 for a 140% gain. And VOO is trading at $559 for a 190% gain. All the percentages were rounded to the nearest tenth. Clearly, silver is falling behind as gold and VOO results are beating it by 50 points each. So why even bother with silver? Silver is going to be for investors looking for precious metals, but they can't shell out enough for gold. A gram of gold is going for $1.34 right now, and an ounce is going for $3,500. Silver, on the other hand, much more affordable at $40 an ounce or $12.75 per kilo. Good luck misplacing a key of silver. In my opinion, having a couple bars of silver doesn't hurt, but personally, it's not worth my time. Silver covers less than 1% of my portfolio, and it's pretty much just like rare mints and like just cool cartoon coins that I saw. It's nothing really, it's not really an investment, it's just more collector items. Other than the smaller return, the reason I'm not a big fan of silver is because it's big and chunky and it takes up all your space. If you're storing metal at home or at a safe deposit, you're gonna run into a problem if you're buying a lot of silver. And those safe deposit boxes charge a fee. Now, let's talk about the S&P 500 and how it compares to gold. Gold has been considered a safe haven investment worldwide. It always holds its value and tends to rise in price as time goes on. Gold is used in technology, it's used pretty much everywhere. Only downside to gold, you gotta get a full ounce, otherwise you're gonna be losing money. Buying gold in anything less than an ounce leads to very high premiums. For example, like I said before, a gram of gold goes for $135, meaning that whole ounce is going to cost $4,154. Meanwhile, 1 ounce bar goes for $3,500. It means you're paying a $600 premium for some dude to chop it up into little flakes for you. Why the hell would you do that? Also, you're going to have to wait much longer for prices to rise so you can actually make a profit on that little gram you just bought. Long story short, buying gold means at least an ounce. There's no fractional shares like stocks. I got another video linked in the description if you need help on finding a place to buy gold. Gold also tends to inverse the stock market, meaning it stays steady or rises during bear markets. Times are changing though. We live in a digital age, and the S&P 500 is becoming the go-to vehicle for long-term growth. The S&P 500 is an index of the 500 largest publicly traded companies in the US. SPY, VOO, and SPLG are different ETFs that track the index. While it's more volatile than gold, it's historically performed pretty well at 7 to 10% per year. Although the past 5 years have shown us crazy returns, we've also seen 3 crashes at roughly 20% each. Trust me, it takes a lot of determination to bear these losses, but it can come in handy. Volatile price crashes can create a nice buy opportunity, and stocks allow purchases of fractional shares, so you can invest any amount you want without worrying about premiums like on a gram of gold. What can buying the dip do though? Buying the dip can lower your average price and increase your profits. The more you spend buying the dip, the better you'll come out after the crash. Alright, so all this sounds cool. Silver definitely falls short, but it's not a bad investment. Gold is less volatile, but it's similar to the S&P 500. The S&P 500 has the benefit of being fully digital, and you can invest fractional shares, you can create automated recurring investments. There's a lot more you could do when it's digital. And even though it's more volatile, it's proven to be a sound investment. So, all of these are great investments. But let's look at something a little more growth based, like QQQ. 2015, it traded at $109. Now it's trading at $541 for a whopping 390% gain. Y'all, that's crazy. QQQ is an ETF that tracks a different index, the NASDAQ 100. It's 100 of the biggest companies in the USA. It's mostly tech-based, which is why there's such an explosive growth. It's much more volatile than S&P 500, way more volatile than gold. QQQ is a lot more riskier, but it has made people very wealthy over time. So, what do you do? Well, I'll tell you what I do. Personally, I got about a percentage in silver. As I said before, it's just collector stuff. Roughly 25% of my portfolio is gold, and the rest, the last 74%, is going into various stocks, ETFs. Now, you can take this information how you want and choose how you want to allocate your portfolio. Personally, I think all 3 of them are great, but obviously silver's a bit lacking. I hope y'all enjoyed. Peace.